The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour, and this is the Friday edition. This is actually the first day. This is the first trading day of a new month, March. January, February, March. Oh, April. January, February, March. We've had a third of the year. Oh, that's why the first quarter results are coming in. Okay, so April the 1st. Wait, January, February, March. And this is April the 1st. Wait. Don't get confused. This is March. 3-1. Yes. January, February, March. Sorry about that. I mean, I wrote this about 10 times just this morning and about 10 times last night because with all my charts that I'm doing. Fancy that. Getting confused. Anyway, most important is that I'm really looking at the market so closely. And I got a whole bunch of emails moments before I was about to do the show. So you can see why I'm thinking that could be a different month. Anyway, we're here. We are here 11 o'clock till 12, Monday through Friday. And this is the Tiger Technicians Hour. Yes, I know. 877-927-6648. And my producer says, yeah, April Fool. I really was full, wasn't it? This is what's going on. And it's so fascinating how often this happens. In my Trader's Corner, that's what my subscribers get every day. Very detailed, like between 14 to 17 bullet points. And some of it is just because it's very important for me to looking at, I say, the TLT or the GLD or the SPY. We might not even have positions there, but I always put down the parameters in this very brief summary, the top headline of what we're looking at, so that you don't have to look at all the different charts, half a dozen charts that I sent. Most importantly, and this is what I was talking to Tom about on my interview with him yesterday, is that there is something happening here that is really important to take note of. The first thing is that the Dow, I have no way of unnotating what's there. I'm going to show the chart in a few moments of the Dow. And the most important thing about this is that the Dow has made a new recovery high. I have to call this leg A. We've had one A that aborted. Actually, it wasn't an A. It was just a single leg up. I was trying to explain that to subscribers today. And I'm going to go through that in a moment. But I wanted to talk about something that's even more important than that. There's a pattern I spoke to Tom about yesterday, and that is this declining, like an ice cream cone on the side. I call it the falling axe. In my CD introducing the ChapmanWave methodology, that goes, the falling axe chapter is chapter 24, and it explains it in great detail. But even more important than that, chapter 24, it gives you the chart formations. This is what we're looking at. There's a beauty. And what happens often is that the expansion can be at least a one-to-one to the upside of the breakout. I actually don't do that. I start off conservatively by saying if there's a breakout, then the last trough low would be where you'd expect the one-to-one expansion. That's number one. And number two is if you go above the downtrend line, that downtrend line says look to the left for the first peak of significance. And then if it takes it out and it isn't the high that you've just come down where you've started this declining trend line, then the high is where you're going to go to. If you break above it, you can start thinking about the one-to-one. But it's just a fantastic indicator. These are the technical indicators that I'm going to be teaching a week from tomorrow. There's still time. And the reason why I'm bringing this up now is that it's the Master Trader Series. I call it level 2 because most of the people that come have gone through level 1 and have done quite a lot. They've done they trade using the ChapmanWave methodology as one of them. Maybe it's the primary, but it's one of the technical tools. But most importantly, in this one, I often get people who have done my webinars who do understand the whole core of the ChapmanWave, and they know that in these one-to-one live presentations, these seminars, when I see a quizzical look on her face, I don't accept that you're nodding your head up and down. I say, no, you haven't got it, because I have dozens of examples. And this is going to be the most exciting one that I've had for a long time, because I've got the book, a quick A to D. Where was that this morning? I saw it. I'm sure we'll come across it. A very quick A to D says you can pull back, but it's not a major crash or anything. You can pull back and then go on. It has this falling axe formation. Let me go to the chapter right now. A, B, C, D, F, G, F, G. Falling axe, not the Groucho Marx, not the flat base restart, but the falling axe. And right there, I have about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I have about 15, and I'm sure by then I'm going to be adding a whole bunch that I haven't put in. So those are examples that I'll give you to look at. So whether or not you're totally conversant with the actual wave count, the ABCDs, the chart formations are so important. Now let me go back. And so this is going to be at Babson. This is in Wellesley, Mass. It's Babson College, but actually we're going to the Babson Executive Conference Center, the business part of there's a hotel accommodation there. I don't know if can you call it a hotel? Well, there's a residential part. You just come downstairs, fantastic food, because they have a culinary area. Just I always talk about the food. And boy, do we have a ball when we're there for lunch. I mean, it's compulsory to go back for seconds. For every course. So anyway, we have a wonderful time, and it is just a tremendous learning experience. And I especially asked you if we could have the discounted price. I'm not making specials or anything. It is the discounted price. Usually we'd have a special early bird. I said, no, this one is really important. I really would like it. And not only is it important, and now I can go to the nitty-gritties. First of all, I'm showing the E-minis here. The E-minis at 1530, just the other day. This is the March contract. I've got the June as well, but this is the March one, most current one. 1530 was the high on the 20th of February. It pulls down sharply to 14.81. Here's another technique that I'm going, even for those of you that have done many of my level 1 and 2s, you're going to be surprised at the number of developments that I've added, increased. And one of them is something I've discussed often, but I'm making a big deal about it. It's the severity of the decline and the rally that comes afterwards. And there's another thing. It is also how the theory that huge gaps to the downside, you've got to be careful, because not only do they get filled, but you can go back and retest the lows. I couldn't tell you how many charts have gapped huge to the downside over the past couple of months and have gone on to higher and higher and higher highs. I'm going to discuss that whole thing. So here we go. This is the E-minis. If the E-minis break, I don't say they're going to. I'm saying if, because of their trend line. I have to say if. How can I say it will? I can give you reasoning why it should. I'm saying if you see that it breaks the high of 1524.50, the high of the 28th, that's yesterday, there's just a really good chance it's going to retest the high of 1530. If this becomes a tremendous barrier because the stochastics at 51 and can't keep running, and the MACD deflects, this green line deflects lower, it means be very careful, because that's a serious resistance area. Here's the 120-minute chart. Look at this, all the different patterns, and we'll be discussing them. Look at the way the fast-moving average gave a fabulous move to the 120-minute chart of the E-mini to the 1524 peak D. Remember, the objective is to go from a lowest low bar to at least a D or an E. It could go higher. In this case, it went from 1481, the low, to the peak E, and then continued higher to a peak F at 1523.25. Now, I had a question, Jason had asked about the 120-minute charts. I had a call from someone last night, or was it the night before? The night before. And we spent some time looking at the charts, and I said, okay, he was also using Think or Swim. The bar, this bar right here, where I get a beautiful doji, you don't get that. My bar is 17:15. That's military time on the 25th. We need to resolve how you can get that. I get an incomplete bar, but it's counted, and you get full 2-hour bars. we need to resolve so that you can get the same wave. In the end, it almost always turns out that I will go to, say, an F, but the other one will go to an E or something like that. So we got to resolve that. Now, let's just get to the nitty-gritties of the market. The Dow is up 11. It was down 80 points before. So it's up 11 at 14,066. The S&P is up 333 at 1518. The comp index is down 3 at 3156. Gold was down sharply, then it was up, and now it's down at 90 cents at 1577, trying very hard to make some kind of a low. The dollar is in leg. Let me just do this real quickly. DXY. The dollar is in leg C. I call this an instant restart recycle. This is what we'll be going through in the Master Trader Series over and over. How this works, how you can get the unconventional. This is a very conventional one, and in leg C, and that says it should go to at least a leg D by next week. So the dollar's still looking strong. You've got bonds up 17 at 144.11. This is going to be really interesting. And the other aspect that I talked about is that copper is way down at 3.5. That's not great. But you've got a discount. You've got a tax break here because crude oil is down at 91.04 minus 1. Think of it as a tax break. Let's go to our first caller. We've got Ilke in Boston. Hi, Ilke. How are you?
Very well, Basil. How are you today?
I'm very well, thank you.
Did you play tennis?
Yes, I did. In fact, I snuck in 2 games already.
Could you see the ball? Could you see the ball?
That's right. It was the funniest thing. The yellow ball had this halo. It looked like Saturn, right? It had this halo around it. I had to wear dark glasses because every time I looked up in the indoor courts, there were these. They have skylights, so it was kind of difficult. And the funniest thing is, I actually played pretty well, I must say. Every time I looked up to serve, the fans were turning around, and there was a reflection that made it look like someone had hit a ball that went right across, on the ceiling. So I stopped the serve, and then I realized it was just the fan. It was really interesting. It was playing in a fog, absolutely in a fog. But we don't let little things like that interfere with the game. So you would like to look at?
Yes, it's by reference.
Okay, so let me do this. I believe we spoke about this once before.
Yes, we have. A while back.
Yes. Okay, a while back, and it's done fantastically. A, B, C, D. So, folks, let me just do this. If you're looking at the stock that I'm showing right now, if you're looking at Tiger TV, if you're looking at, if you're on tiger.mobi, whatever device, it doesn't matter. I'm going to pull this right across. Oh, there's the break. And I'm going to show you exactly what I talked about. In the ChapmanWave, what you look for is the lowest, most identifiable low bar. If you get a buy signal that goes to a buy mode, it should go to leg D. Where are we now in the monthly chart? That's the one on the right that I've just opened up. We're in leg D. That gives me a chance, by reference labs, to go through it and just re-notate it. I know I've done it before, but I'll do it on the white background charts with Ilke from Boston. Straight off this, the Dow's up 11.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Hi, folks. We are back, and I'm just finishing up some notation here. There we go. That's how long it takes for me to notate the monthly chart, the weekly chart, and the daily chart of BRLI, trading at 27.39, up 91 cents.
Basil, just for 1 second, because I cannot see the screen. Did you say it's a peak D that I already did, or leg D on a monthly?
Oh, hold on. This is leg D.
Yes. Okay. Good. Okay.
Okay.
It didn't go above the peak C, though, right? So
I get you. Do you have a moment, or are you going to be in a rush?
No, I can listen to you. I won't be able to probably talk as much today, but I will.
Oh gosh, that's going to be terrible.
Oh, I can't believe it. Right.
Oh, I'm sorry. You know what? I had the 120-minute chart up because I just look at charts and I never look at prices or anything. I just look at the patterns. Excuse me for a moment. It turns out that I did not finish the monthly chart. I actually did the 120. Oh, what a pity, because I want to do that. Yeah, give me 1 second. I'll do it.
It's
people
fine.
can see
No,
me.
that's fine. Don't.
No, I want to do it. People will see me do it live right here. A, B, C, D. D goes to an E, and now it's an A, B. This is legs. You've made a peak C in the monthly.
That is correct. That's okay. Good. We're on the same page. Okay.
Folks, we're looking at BioReference Labs. Now, there are a couple of things about the stock that are really important. So, BioReference Labs, do they do the tests, or do they have a medical device product, or is it tests?
I'm so sorry. I will not be able to answer that.
Doesn't matter. But I'll tell you why it doesn't matter, because I'm going to tell you about the chart, because it does not look like a usual biotech company in the usual biotech sense that you get these huge moves up and then powerful moves down, and then it just hangs around for a long time before it has. This is just steadily, for years now, right through the crash of 2007, or the sharp 51% decline in the market, it's making higher lows and higher highs. And that's really important. And because it's peak C and it's consistently gone to at least a D, this is a very powerful looking stock. But I would get a little nervous if in this move it doesn't match the previous peak D high of 2467 in April of 2010 in the monthly chart that made a kind of a U pattern, went to a nominal high bar. In fact, if I had to do a rectangle, this is all part of what I'll be doing for in Saturday week in the classes, in the seminar. I'm going to show how. I'm sorry, what?
I will be there to watch.
I'm looking forward to it. That within a rectangle formation, you can get, on a shorter time frame, you can get a pullback that takes you to another peak D or E, slightly higher. It goes towards, at, or just above the previous high. That was the high of what I said was April of 2010. That's exactly what it does. May of 2011 at 25.99, and then it has the big decline, because at that point you've got a complete divergence between the price moving higher, the MACD failing, and the stochastic failing.
Yes.
Now what you've got, it goes towards the 200 period moving average, down to $11.41 since November of 2011, had a powerful move leg A up, pulls back, goes back above the 9 EMA to B, then to C, and C is at 32.86 October of last year. Now it's holding the 9-period moving average. So what I wanted to say is, before we had a very long-legged doji candle, I'm going to be spending some time on the long-legged doji candle in this next seminar. And one of the things that it's done here, it's done it in 2 bars instead of 1 bar. So there's a difference. And the MACD is strong. The stochastic is not great, whereas before it pulled back quickly and the price held. Here the stochastics pulled back and the price hasn't budged. It's still holding really well on the 9-period moving average. So this is it. So the monthly chart at this particular point with February, I've got it right. February concluded. The first day of the month is seeing a nice candle thus far. Now the weekly chart made an absolutely fabulous set of price points, because it used the 200-period exponential moving average as a rebound level back at June of last year. Now it's gone to an alternate count, and one of the reasons why I've kept the alternate count E/A on the July week of the 13th candle is because although the stochastic went up and starts to pull back down, the MACD was holding well. That's number one. Number two is that when you start a brand new buy mode and the MACD is quite high and it makes a little M formation, you've got to be a little bit careful, because sometimes it can run out of its momentum early. So we'll be back. We got Ilka in Boston. We're talking about BRLI, which looks really good. I'm taking a little time because it actually looks good. It's not like I have to rush to say, get out, get out. It's looking good. And I'll be back with Ilka and Mike straight after these messages.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everybody. We are back. The Dow is up 10, S&P is unch, and we've got the president about to speak momentarily, I believe. Sometimes that does affect the market. Doesn't really matter. There's certain things we're looking at. We're looking at BRLI, which is I've already forgotten the name, BioReference Labs, and it's trading at 27.45. Lovely candle as of right now in the daily chart. I'm going to just quickly do the weekly chart and say I kept the parallel wave count because it's gone to a peak G/C in October, the week of October the 5th. It pulls back, and now it's done another peak A, B, C. And the first one had a higher low, so it's still active. This one's got a higher low than the 2366 low of the 16th of November, the week of the 16th. So there's a chance that there could be a double overlapping wave. But I'm going to go one step at a time. And what I'm going to say is today's close will be important, but it's next week by midweek. If by midweek it's established a peak A and it pulls back to the 2632 to 2610 area, that should be the worst case. Most important is that whatever the pullback is, you want to see it climb into the area of 2807. As soon as it does that, it says, whew, now the on-balance volume in the daily can start to improve. The technicals are looking good. Everything's in place. And the 120-minute chart, as I said, I made a mistake. That's at in leg D, but it has 2785 as the 200-period exponential moving average target. I like the chart. I would just say, I don't know if you're long or short. Are you long?
Long, yes.
You're long. Okay. If you're long, then I like the position, and all I'm going to say to you is just on a very short-term basis, you're going to have to give it a little room because the weekly has to improve enough, and that's only going to do that if by next week, later next week, you start to see that the weekly chart is getting into the 2830 to 2860 area. That'll be fabulous action. If it starts to pull back and it gets under 25 in the next 2-3 days, I'd be hesitant to have an increased position. I would, yeah, if you aren't in it, I would wait. But if you are in it, I'd have a stop on at least some part of it. So far, this is great action when the market's going down, it's moving up. Hey, thanks for calling. Really looking forward to seeing you in a week.
Same here. Have a wonderful weekend.
Thank you very much. We've got Mike online, Mike from Ormond Beach, Florida. Hi, Mike. How are you?
Good, Basil. I kind of have a continuation to my question I asked you last week. I've just been so busy with work I couldn't get back to you. But looking at the Dow on a long-term monthly chart,
yes,
I had peak D coming in at May 2011.
Yes.
And what fooled me was when we had a high in May of 2012.
A year later, it went just above that. And the moment it went above it, okay, that's what you're talking about, right?
Right. I'm looking at the high we had in May 2012 is E, and the high we had in October 2012 is F.
Right. Now, you do remember that I was talking about a parallel wave count because the stochastic and MACD were holding so well. And what I said is an E. What I'm showing here, folks, this is the daily chart of the Dow. I'm sorry, the monthly chart of the Dow. And above it, right there, you've got a blue A and a blue E and a gray A. And I always have to do that when the MACD has pulled back and it starts what looks like a brand new buy mode. But when you get one that starts in the M, that little the trough of the M going from the one arch to the other, that's where I always say I've got to be a little careful there because that M can fail at any particular point. But because it held so long, even now at the new highs, I'm calling this, actually on this particular chart, I've got it as G/C. I'm not doing that. I'm calling it, I'm not going out on a limb on anything. I'm using my technique to say that in almost all the other charts I have, I don't know why I didn't change it on this one, I've now got an up arrow, and this is leg C, and if there's no new high above 14,194, is that what the high was?
49.
14,149 in the whole of March, this will be peak C.
Okay. But the biggest question I have is, what is the biggest thing that distinguishes a peak E/A to identify, is it a peak E or a new peak A? What's the biggest thing that identifies that?
That's a really good question. What I'm going to say to you, I'm going to give you the answer, but I'm also going to establish that very quickly. This is exactly the type of thing that I do in my Master Trader series or in my webinars. I spent some time on it, but let me just define it for you. When the action in a smaller time frame or a larger time frame than the one you're looking at gives you a sense of the greater tide, then the way I'm doing that is I'm saying I'm going to move this chart just to get away from the monthly for the moment and say the reason why I'm talking about the Dow daily as I have no choice but to call it brand new peak A. It can fail. It would be so unusual for it to fail, but it could fail, is because of the dynamic of the Chapman wave having made a decisive peak G-top, and anything new has to be called A, even if it fails. So using the premise of the Chapman wave methodology, the weekly chart with the stochastic at 96% and the MACD very, very strong says to me that the tide has not changed in the smaller time frame, because it's very often the smaller time frame that will dictate the next one up. In other words, if the Dow daily does fail and the Dow just croaks, and by Friday week, this time next week, we're looking at the Dow at 13,750, I have no choice but to say I have no idea what that count is. That is just a complete failure. Not only that, if the Dow goes into the 13,000, say 500s or something like that, then the weekly chart stochastic will decline. But as of the close of this week thus far, and as of the close of the month yesterday, all the technicals are saying that there's a very good chance that we will go to higher highs this year in the monthly chart.
Right.
So you understand that, yes, there's some subjectivity, but it's way above the 9-period moving average. It held the 9-period moving average from after peak, the new peak E/A that you're talking about in May of 2012. That's the only bar that closed underneath the 9-period moving average since it broke above it in October of 2011. To my eye and to the reading of the ChapmanWave with the uptrend that I've drawn to the left side, right side price time match of 14,198, which actually comes in, it comes in either this month or next month if there's going to be an exact time price move. I have to just conclude that this is a peak C. Mm-hmm. And I'll have to go back and call it a rare G in the monthly chart if it aborts by breaking the uptrend line, which is at 12,500. Then I'm going to have to say, not good. That probably is going to be peak G, and even then I wouldn't be 100% sure. But that anything under 13,000, I have to say, I don't know what this is, but it's a very sharp decline from peak C. My suspicion, and it's only a suspicion, is that will occur a little later in the year. We will get our first significant percentage pullback. That's just what I'm thinking. We'll see. Does that answer your question?
Yeah, it makes it a little bit clearer because, I'm just trying to get better with the ChapmanWave, and that's the one part of the system that I seem to have the most
wave
trouble
count.
with.
So
Yeah.
let me make it absolutely clear. When you see me put an E/A, and then an F/B,
Right.
it means there is nothing wrong with the technicals at that particular point. I don't even have to make a decision. I'm just notating it to say there's an alternate wave count. Be careful that it doesn't fail, but it hasn't failed. I have no choice but to say. Now, sometimes I'm just real clear, and I just automatically, for instance, in the weekly chart, I haven't got any alternate count. I've got it as leg B,
Right.
in the Dow. I could have said F/B, but no. At 96% in the stochastic and the MACD, I'm happy as a clam. Now, I'll spend next week talking about a little bit more. The candle that's forming, and we haven't finished it, the candle today that's forming in the weekly chart is going to give me an untold amount of information about what should happen over the coming 2 to 5 sessions. That's 2 to 5 weeks, based on the weekly pattern that's unfolding right now. And funnily enough, in a sense, it kind of confirms a lot of what I'm thinking, but I need to see what the close is today, and I need to see how Sunday night, what with the sequestration, etc., Sunday night to Monday is in the market. But in the meantime, I'm going to stick with the fact that the Dow has held very well. You can't have the general lead the troops. He has to have the troops, and in this particular instance, the troops will be if the S&P by, let's call it Tuesday afternoon, Wednesday, has managed to push above 1525.34. That's the high of the 28th in the daily chart. And that to me would be very important because it'd say, aha, we can get the S&P, and this is what I said yesterday, there's a good chance that the Dow will go higher, as long as it doesn't break down the next day or two. But there's a good chance the Dow will go higher. I'm looking at a couple of Dow stocks that are acting very well. They can do it. That the S&P will follow the Dow reluctantly, and that the IWM and the Qs and perhaps the New York Stock Exchange might be the laggards. So that's the scenario I'm looking at. The whole thing collapses if the Dow even on a very short-term basis, I would say that if the Dow closes under today's low of 13,937 by Monday morning, then I'm going to have to say, yeah, the Dow still has more strength than the others, but now we're headed for the candle low of this week, and that's going to give me a whole bunch of information. So the candle that's forming in the weekly chart, let me just open this up and make it nice and wide so people can see on Tiger TV. It's this one right there. The candle that's forming this week on the Dow with the open of 14,054, trading at 14,031 right now. If there's any type of a doji, we might close at the low of the day. But let's just say there's some kind of a doji here, and we close kind of where we are around about now. That's going to give me a lot of information. And look what's happened. You see the doji candle of the 15th, the week of the 15th? Very tiny little plus sign. Look at the bigger one, but it's still a doji from last week. And now you get the big one. This is like the three bears, right? This is like the one that wants cold, the one that wants medium, and the one that wants it hot. Well, this is the biggest candle. And that's going to say, I have a chance of putting in the weekly chart that wonderful candle, the wonderful chart pattern, the oval formation. And that says we could have a very choppy next 2 to 5 weeks. I won't know until we close out today, but it says we could have a very choppy 2 to 5 weeks, a little bit lower lows, a little bit higher highs, and just choppy. And that means stock selection is going to be absolutely imperative. So I hope that gives you some sense of what I'm looking at. The reason why the monthly chart has a peak C, all the technicals are in favor of it, and that's the way I'm going to keep it for now. The above, nicely above the 9 EMA, well into the upper part of the up channel. MACD is strong, stochastics at 89%. So that's the answer I think that you were looking for. I hope that clears it up.
Yeah, it made it a little bit clearer. Thank you, Basil.
Okay, thanks so much for calling, and thanks so much for working at the ChapmanWave. Hope it's going to be very rewarding for you. Thanks, Mike.
Bye-bye.
So, folks, this is the way I'm looking at it right now. Let's go to, I'm going to go to the black charts just for fun. You know, I just, the IYT. The IYT is the only index that did somewhat what the Dow did. It went to a new recovery high yesterday. The chart formation is different, but it says that if the IYT holds 100, it's the iShares of the iShares Dow Jones Transportation Average Index Fund. Whew. That's this chart on the left, black chart. Let me just have a look here. Yeah, in a way, I think I like the look of the black because it's just thing. Look at that white line. You see how it's held the white line? That's the 9-period exponential moving average. Look at the yellow line going up to the peak E. Look at that yellow. This is the fast moving average of the MACD going down. I must, for some reason, I can't remember now how to put on the white chart. You will see that I decided that I would put the MACD printed, MACD 12-26-9, green, red, dark. You can see all the indicators. Stochastic slow, so that I don't have to always keep mentioning it. The black charts, I took it away because I want them as clean as possible. Maybe I'll put them back at some point. But this daily chart has gone to an E/A. Now, this is different because the technicals are actually weak. So I have to think, if price goes above 107.46, that's an F/B. I'll be back. Basil Chapman, technical Friday on the ChapmanWave. Dow's down 24, S&P's down 3. The day's still young. I'll be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman. I didn't realize it was so late. I must get to those the questions. Number one was from Australia, and the question was on the Aussie. This is the futures. Now, I don't get the futures, but the question is, where would you start the A? And I believe that I'm looking at the right time frame, because you're looking at A starts right. You have to have formed a trough. The bar that makes the low cannot also be the high. So this is the low right here. I'm using I'm sorry, I have to use EWA, which is the ETF. It must be close if the chart that I'm looking at is correct. That low of 26.30 on the 21st of February, that is not the low. The next bar on the 22nd says, aha, the low was the day before. You cannot call the bar that makes a low the low, because you haven't got the right side. You have to have the right side trough. You've got to make a V-shape turnaround. A V-shape could be a U, but it have to make a higher low bar. So that's the question there, and I sent an answer to him. And the next one was 120-minute chart on Amazon. I did that for Chris the other day. Now, Amazon 120-minute chart, she says she sees a falling axe formation. The falling axe formation, I agree. Let me just really quickly do this quickly. We've got Nico coming up. You got Nico and Paige. Should be a great show. I always try as much as I can to listen to them because they have just a wealth of information about health. And, wealth and health go together. There's just no question about it. So here it is. You're absolutely right. I see that as well. But the only difference is you've also always got to think of the fighting two patterns that occur. When you got the falling axe to the downside, always put in the arch formation. And what you want to see is a decisive break above. And in this case, Amazon would have to break above 267 round number high in the 120-minute from 15:30 military time on the 28th. So that's yesterday at 3:20. So now what you want to see is that not a pullback, because it'll fail because the stochastic's only at 74%. So if Amazon breaks underneath, I'd say somewhere around 259, you've got to be real careful because it's making the arch formation. By Wednesday of next week, if it's gone above 267, that's positive. Next question was TJX. The squash formation. This is a pattern that I talk a lot about in my seminars. What you do is you look for the way the MACD and the stochastic are aligned. And yes, Jim, question about TJX, absolutely. And the torque of the stochastic takes you to at least a very sharp B or a C in this case the 120-minute chart. But then the MACD, the fast-moving average, has to take over the momentum. So if TJX actually pulls back under 44.50-ish, it's at 44.95, there's TJX companies, that'll say, whoops, be careful, it could be failing if the MACD fast-moving average pulls back sharply. So far, you're absolutely correct. It's holding beautifully with the market down and up and down, and all of this is holding very nicely the 9-period moving average. So you need to see leg C start about 45.42, and I'd say 120-minute chart, it should start by Monday afternoon, Tuesday the latest. So I think I covered those questions. Yes, the other question that I had was, I'll try to do it. No, I can't do it quickly. You know what? There's no rush. I wanted to talk about the pattern that's unfolded in the Dow. This is Technical Friday. We've done a bunch of technical things. All I'm going to say is that the pattern that's forming right now says that the MACD, the fast-moving average, has to cross the slow-moving average to give me a sense of continuity to the upside. If it deflects lower, that's where you've got to be careful. So I hope that covers a bunch of the questions and stuff. Nico DeHaan, Paige Clark, Living a Primal Lifestyle coming up. Stay tuned, fabulous show. Great shows all the way through the afternoon. Have a fantastic weekend. And please look to see if you want to sign up for give me an email if you want to know about it. Saturday a week, Master Trader Series, review and new things. I'll be back Monday, and my opening call, go to the front.